This is your financial shield. Physical metal, primary currency metal gold, secondary currency metal silver. What do you think the banks are getting ready for? Maybe it's not the unicorn, but it'll be a universal CBDC. They will attempt to force you into it. You vote with your purse or your wallet. This is how you vote. This is my vote. And I hope it's your vote too, because frankly, it's the only thing that's going to save us.
Russian digital ruble. A mere 2% of Russians would trust the digital ruble with all their savings, showing concerns over information and system reliability that hinder full adoption of the government-issued digital currency. BRICS membership. The 6 nations invited to join BRICS have accepted the invitation, revealing expanding interest in the economic bloc. Yet, the identities of the next potential members remain undisclosed for now. Indian rupee's ascent. While de-dollarization seems distant, India's oil and gas minister aspires for the rupee to dominate transactions, envisioning it as a leading global currency. US dollar's clout grows. The US dollar maintains its dominance in global payments, with SWIFT data indicating a record-high 46% share of FX transactions involving the dollar in July. Economic crisis warning. Economist Peter Schiff predicts a looming full-blown financial crisis in the U.S., likely before the Federal Reserve hits its inflation target, prompting speculation of policy adjustments. Silver investment logic. Rich Dad. Poor Dad author Robert Kiyosaki underscores the rationale for investing in silver, pointing out its affordability compared to counterfeited dollars and its potential value in the market. Let's continue our enlightening discussion with Lynette Zang.
Had I heard about the unicorn that was announced between the IMF and the World Bank at the spring 2023 meeting, and admittedly, I had not heard, but I really always appreciate it when people bring things to my attention, because at the minimum, I do look at them. And then if there's something to talk about, we're going to talk about it. And that's what we're doing today. So this was announced back in April of 2023. And I thought, how come I haven't heard about the unicorn? So I went in and looked. But in June, well, we had the head of the IMF come out and say, we are working hard on a global CBDC platform concept. So it kind of seems to tie in. And we've looked at it before, and I've always said the SDR made the most sense because it's made up of all different currencies, and they could put every single currency in it, making it easy to have a local currency and a universal currency. We are working on a principle of interoperability, she said. Such concept would involve a shared infrastructure that would avoid the emergence of settlement blocks, which is the last thing we want to avoid further economic fragmentation. So let me explain what they're talking about here, because what she's saying is that, what have we been hearing? We've been hearing about the breakdown of globalization, right? Now, in the 80s, that's when that big globalization push started. I remember thinking to myself, because I was a new stockbroker then, yeah, I can see some problems with this. And of course, with the supply chains breaking down, et cetera, we saw the problems with it. So now what we're told is that globalization is breaking apart. But I've also shown you in the past where, for all the talk of the globalization breakdown, we've got the financial system that is getting even more and more globalized. And that's what she's talking about here. Those settlement blocks would be just that group of currencies. So when you're looking at what the BRICS nations are doing, where they're agreeing to settle trade in each other's currencies, that's what she wants to avoid. So what they're trying to do is come up with a universal currency that everybody will use. And the IMF, well, we'll just get into this a little bit more and we'll see where this goes. This is really quite interesting. I could not find, I misspelled. But anyway, I could not find any direct references to the unicorn in the IMF or at the World Bank. So that sent me down this rabbit hole. I've included those links so you can see for yourself. But In the 1960s, so this is from the white paper from the Unicoin. In the 1960s, the United States did not have enough gold to cover the dollars in circulation outside the United States, leading to fears of a run that could wipe out U.S. gold reserves. Let's talk about this statement for a minute, because there are a few things that really stand out to me. Number one, they're referencing a period of time when we were in flux, shifting from at least a quasi-gold standard to a debt-based standard. And when they say that there was not enough gold to cover the dollars in circulation, what actually was happening was that gold was fixed at $35 to an ounce. That was the Bretton Woods Agreement back in the 40s. But the U.S., in attempting to fund the Vietnam War and the other wars that were going on, but primarily in this case, the Vietnam War, they were printing more dollars, and so they were not staying true. They were breaking the agreement that was agreed to in Bretton Woods. When you hear somebody say, well, there's not enough gold to cover a currency, that's garbage, because what needs to happen is the price of that currency, the price of gold in terms of that currency, needs to be adjusted. The whole point of gold in creating fiscal responsibility is that it is finite, not infinite, like the printing presses, which are completely infinite, right? I mean, they could do much of that as they want.
Don't forget to join us as we explore the unfolding events. If you think the UK's high inflation cycle has run its course, think again. Optimistic forecasts based on comparisons with the US or Eurozone ignore the unique dynamics of British inflation. Fed chair warns U.S. inflation battle not over and hints at further rate rises. Jay Powell tells Symposium in Wyoming that inflation is still too high, but that U.S. central bank will keep at it until the job is done. China fines U.S. due diligence firm Mintz Group $1.5 million for unapproved investigations. U.S. Commerce Secretary will visit China next week at a critical moment for the world's top two economies.
Now, it also needs to have a widespread adoption framework. And how do they do that? Well, you combine global electronics, KYC, which is know your customer, right? So they want to know everything about you, with artificial intelligence and machine learning. It's showing major promise as common avoidance patterns are more easily recognized and alerted to network monitoring systems. I mean, think about what they're saying there. Think about how you feel about that. Common avoidance patterns. So they're going to know when you're trying to avoid something, and they're just going to, boom, shut you off or go in and take everything. I mean, you will have absolutely no choices. You will have no control. It's really about managing, like stronger nudging than they're doing right now with perception management. And the problem with this particular one, and I got to tell you, in my opinion, the Unicoin is not going to be the one. And the only reason why I really say it, and the reason why the reason why I say that is because it is not owned by the big kahunas. JP Morgan's, all the banks, Wells Fargo, Deutsche Bank, all that stuff. If they were part of this, then I'd say this is the one. Because the other thing, and the reason why I still did this, even though I don't believe that this is going to be the one, is because this is going to be the structure. This is a warning. A warning. Will you take heed? They know how to create demand. They're doing it through foreign exchange rates. So yeah, they don't want one big currency. They want local currencies and then a universal currency.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.